Here with us is Mr. Naushad Forbes, who is co-chairman Forbes Marshall and former CIA president. Uh, we'll talk about the forthcoming budget as well as the macroeconomy. So to start with, Mr. Naushad, my first question to you will be that in your recent article in Business Standard, you have talked about inclusive growth, that how inclusive growth can lead to a high economic growth on a sustainable basis. On that count, what can Mrs. Nirmala Sitharaman do in her forthcoming budget?
Inclusive growth, as you know, has been very much an agenda for both the current government and the previous government. And that's exactly right. It should be, it needs to be, because the more of our 1.4 billion people that we can include in our growth and our progress, the better it is for everyone. If we can create opportunities for all 1.4 billion people, we'll create wealth for all Indian industry for 30 years and for most of the world's industry for 30 years. So it's a huge potential opportunity that we have. How do you approach this in the budget? Because in the budget, there's a limit to what one can do. I mean, the budget is a far-reaching document, but it's not all of government policy. It addresses particularly how the government will spend its money in the course of the year and how it intends to raise its resources in the course of the year. It has a focused objective. I think there are three things that I would say would indicate a more inclusive, growth-oriented budget. First, what kind of allocations are we seeing to health and to education? The primary means of including the great bulk of the population in progress is by enabling them to participate in the modern economy. And that means addressing issues of primary education, secondary education, higher education, addressing issues of health, particularly primary health care. Now, there is a challenge in the budget because the budget is a union government document. Much of health and education spending, infrastructure, delivery happens through the states. So I think what we can look for in the budget is, are there some imaginative schemes to encourage state governments to do more in the health and education areas? Are there specific proposals to implement the new education policy? The new education policy talks about all the right things. It needs to translate into implementation and action on the ground. Will we see in the budget allocations that specifically take forward some of the pieces in the new education policy, like the National Research Foundation, like the loan guarantee schemes, like the education outcome schemes for second standard students in primary schools around the country? If we see many of those things getting attention, then that will automatically, I think, should be construed as an inclusive budget. Two more areas which I would recommend is ease of doing business. The best way of including all firms in progress is by making it easier for everyone to do business. So the more that we see focus on ease of doing business, removal of regulatory issues, removal of discretionary power, those are the kinds of things that make it easier to do business at the end of the day. And that is a policy, again, of inclusion. Last thing on inclusive growth is, what kind of tax policy do we see coming out? A tax policy where you have more exemptions and higher rates is an exclusive policy. It's a policy which excludes people from participating in the economy because you have someone else who's deciding this is a good thing, this is a bad thing, etc. Instead of that, if you have lower tax rates and lower exemptions, then everyone benefits from that lower tax rate. And indeed, you fund it by having lower exemptions. Usually, exemptions are taken advantage of only by larger firms that can deal with all the needs of an exemption system. So if we have lower taxes, lower exemptions, no net revenue loss or gain, that becomes a more inclusive policy again. So these are the three areas that I would look to. What's happening in terms of allocations for primary health and education, including in implementing the new education policy, what's happening with regard to ease of doing business, and what's happening in terms of tax policy. Are we moving more and more to a structure of fewer exemptions and lower rates?
And Mr. Naushad, you have also been writing about how India can attract investors from China who are shifting away from China. In that regard, what do you expect from the budget?
I think this government has worked hard to try to attract investment in new sectors. For example, by reducing the tax rate on new manufacturing companies, as you know, quite substantially in 2019. So I think many of those provisions are already in place. There is, in addition, the production-linked incentive scheme, which is meant again to attract investment in manufacturing in a selected set of areas. I have some issues with that, which we can talk about later, but it's intended to deepen supply chains and attract new investment in these new manufacturing areas. I think that is only welcome. We also have many sort of sunrise sectors that have been identified that the government is trying to promote. Now, the question is, how do you promote them? How do you promote a sunrise sector? One way is that you try to incentivize people to manufacture. I'm all for talking to firms in particular sectors that we want, semiconductor firms. We are very keen to do semiconductors. So if we want to do anything on semiconductors, it's a big investment area. There's a big incentive that's been announced, a $10 billion incentive that's been announced to encourage investment in semiconductors. An area like semiconductors probably requires that kind of focus. Yeah, it requires that kind of commitment as well. It's still, we'll have to see how it all plays out on the ground and how successful it is, but it will need a combination of private sector in participation and investment, foreign investment that brings in the technology and understanding of how to make semiconductors efficiency, and strong policy support to make something like semiconductors happen in the country. So it depends on the sector. If you take, let's say, labor intensive sectors, a lot of the investment moving out of China is in labor intensive sectors, in footwear, in garments. It's not moving to India. That labor intensive manufacturing is moving to Bangladesh, it's moving to Ethiopia, it's moving to Vietnam. It's not moving to India. For it to move to India, we'll have to become a better place for labor intensive manufacturing to happen. So far, we've not been.
You said that you have issues with PLIs. You have flagged it off a number of times. But given the thing that it has already been announced for 13 sectors, now what can budget do to optimize this scheme?
So I exactly as you said, my issue with PLI is that it's a policy where it's a discretionary policy. Yeah. So in principle, I have issues with discretionary policies anywhere in the world, including at home. So that, because then you're counting on someone to decide this is the right product for us to make as a country. And I worry when the government makes those calls. I think these calls of what product is the right product to make should be made by industry and not by policy, not by government. Government policy should be agnostic between different items that one needs to make. Now, as you say, it exists. The PLI scheme exists. It's a large and expensive scheme. It will cost us, as you know, 2 lakh crores, so 2 trillion rupees over 5 years. It's a major incentive scheme. How do we ensure we get the best out of it? PLI scheme has one objective, and I completely share that objective. I think it's a very good, right objective. How do we deepen supply chains? And if our objective of deepening supply chains is long-term industrial competitiveness, as it should be, then we must do whatever it takes to make the PLI scheme deliver just that one goal, not anything else, long-term industrial competitiveness. How can you judge whether something is industrially competitive if you don't have tariffs? If you do not need to protect the manufacture of that item through a tariff, then you can claim to be industrially competitive. So, yes, in the first year, you may need some tariffs on top of the PLI incentive to actually get the item made. But in 5 years' time, surely those tariffs must go away. So, as the PLI scheme goes away, the tariff should also go away. So, I think there are two things that one can do as a sort of layer on top of the PLI scheme to make it more powerful and deliver on this single objective of long run industrial competitiveness. One, that over time the tariffs must go away, the import protection must go away. So if there's a 25% duty today, let it be 20% next year, 15% the year after, 10% the year after that, 5% the year after that, then zero. So that it goes away over a 5-year period. Everyone knows it's going away and everyone plans accordingly. And second, try to encourage exports, because the best disciplining tool that there is to become industrially competitive is exports. If you can compete with other firms outside of India, you can compete with them at home also.
My related question is that under Atmanirbhar Bharat package, the government has been raising custom tariffs for a number of products, which they say India has a competitive advantage with. How do you see budget, the forthcoming budget, whether it will continue with this policy of raising custom tariffs, or do you, as you said, we should have, industry should have competitiveness even at a lower customs tariffs. So how do you
I,
see it?
I, I hope this budget does not continue what's been done in the past of raising tariffs. I think that's actually retrograde. It takes us in a reverse direction to where we should be going in the long run as a country. Um, the I hope instead that we will see this budget announce phased reductions of tariffs going forward in the next years. And I think there are some indications that there is rethinking and a change in philosophy that has come up in the government in the last year or so, which is very welcome. For many years, the general message that we got was that this government was against free trade agreements, was not keen, etc., had big questions on them, and so on. In the last year, that seems to have changed. And we're hearing much more, I think, positive moves and much more positive statements and direction on the importance of trade agreements, the importance of trade with the rest of the world. We're actively negotiating a free trade agreement with the UK at present, another free trade agreement with the UAE at present, in discussions with Australia, in discussions with the EU, which is really difficult and a really big one for us to work on and move ahead, and even some discussions, not much just now, movement just now, but that's more because of problems on the other side with the US. So, there's a big change that's taken place in this last year. I think it's very welcome, and I think that more outward-looking pro-trade stance that we are seeing from the government today compared to a year ago is something that we will also see reflected in, maybe not in tariff reductions, but at least not in further tariff increases.
Uh, uh, and given that economy is still struggling to revive, and the consumer demand, basically consumer demand is quite low, muted in the economy. So, do you expect the finance minister to do something to increase disposable income of the common man, like increasing threshold for income tax exemption, or altering the tax rates?
I I don't think so. And um, honestly, I think that will be the right policy to not fiddle with the tax rates, not raise exemption limits. I mean, our goal should be how do we how do we actually ensure that more and more of us Indians pay taxes at modest rates. So, we should be looking at how we include more and more people also in the tax net at a modest rate with minimal demands on compliance. I think that has to be the long-term objective of tax policy. Uh, and I think we'll keep moving as a country in that direction. And we should avoid the temptation, popular as it may be in the short run, we should avoid the temptation of raising these exemption limits. I think it's an expensive thing to do. It moves people out from the tax net, which is the opposite of what we should be trying to do as a country in the long run. So having said that, how then do you stimulate demand? Coming back to your question, um, I think there's a limit to what the government can do to stimulate demand. Demand is going to come from people individually going out and spending, and companies going out and investing. Yeah. Where will that come from? It can come from one big role that the government has is infrastructure investment. And by spending on infrastructure investment, two things happen. One, it puts a lot more money into the system. So if the government pays its bills, pays its past bills, and this government, to its credit, in the last year, in the last budget, it brought into the budget, many items that were earlier kept off budget, such as the food subsidy. And it was very healthy that they brought it into the budget and let it become a transparent item. Yes, it raised the deficit, but we were just fooling ourselves earlier on. And I think it was healthy that we made that change and brought it into the budget officially, let it show in a higher deficit. Great. Once you have it transparently there, you can do something about it. Right? So I think that's very sensible, good thing to do. But how do you actually stimulate demand? By, I think, spending on infrastructure. If we see more and more spending on infrastructure, I think that will be very healthy. And now some of this infrastructure spending will happen from the union government, the big projects, the airports, et cetera, et cetera. But some of it has to happen from state governments, much of it, in fact. That now state governments are really short of funds. If you look at tax revenues this year, tax revenues have been buoyant for the union government because GST revenues have been and GST collections have been so solid that tax revenues at the union government level, the government has done quite well in terms of its tax revenue. State governments are in much deeper trouble. And it seems like many state governments are highly stressed in terms of their current finances. So what do we see in the budget that will enable state governments to increase their infrastructure investments? If there is some move in that direction, I think it will be a very positive way. It will create employment by the thousand, if not hundreds of thousands, if not millions. And that is the number one way in which any government can actually stimulate demand in the long run, by putting money into the pockets of people, by ensuring that more people are employed.
So it is about state government and union government capex. But what about private sector investments? It has been muted for quite long, and the corporate taxes have already been altered. So what more do you expect now to stimulate
So
private investment?
I think it's a simple reflection of demand. And it's a reflection of demand and perceptions in industry of how demand will unfold over the next 1 year, 2 years, 3 years. Um, in this year, I think we've seen a big pickup in private sector investment. You see a lot of movement on the ground. I mean, I can speak for our own company that's in the capital goods sector. we've seen good investment and movement in projects on the ground. The only question in our heads is, how long will this sustain? We can see it sustaining at least for the next year. Will it sustain for 2 years, 3 years, 4 years? If we have that confidence that it will sustain for 2 years, 3 years, 4 years, then we start creating more capacity. As a company this year, we have invested, I think we will last year, when everything came to a halt, we put a brake on all investment. Yeah. Towards the end of last year, we started moving ahead with things that we had planned earlier. This year, our total capital investment will probably be 4 times what we did last year. It will be probably twice what we did in 1920. So it's significantly ahead of what we've done in recent years. It needs to go back to what we were doing in the 2010s when we were investing substantially every year because demand was growing every year. So it's really what that outlook is, is the medium-term outlook one where we expect demand 3 years out. If we expect demand 3 years out to be twice what it is now, everyone will be investing on the ground. I think the perception is still that, look, it'll be better, but how much better, we're still uncertain. As that confidence grows, as the pickup we've seen in the economy this year sustains for longer and longer, I think companies are operating at higher and higher levels of capacity utilization. It's just a matter of time before you start seeing that showing up in sustained investment on the ground.
So you talked about off-market borrowings, and the government has attempted in the last budget to bring those above the line. How do you see fiscal consolidation going ahead, playing out? Do you think it will be gradual fiscal consolidation as government continues to take counter-cyclical policies?
Well, out of sheer necessity, we saw a huge increase in the deficit last year because of the hit that revenues took and the demands on spending, both sides of the balance sheet. So as a result, we saw a 9% deficit last year. Now, the projection going forward, at the same time that the budget was announced, last year's budget, the February 2021 budget, a schedule was announced that said that, look, 9% will come down to, I think it's 7% this year. The 7% is then expected to drop modestly year on year going ahead. And I think that's the right kind of runway that we should be looking at for this fiscal consolidation to take place. I don't think anyone recommends that we go from, a 7% deficit to 2% in 1 year. Everyone is saying that let it keep improving year on year. And as we see more and more buoyant revenues, as we've seen, by the way, this year, we might do actually better and maybe even be 1 year ahead of our scheduled reduction in the deficit year on year. And if we are 1 year ahead, then we should speed up the process of fiscal consolidation. Otherwise, stick to the runway that's been put in place.
After government rolled back three farm acts, there are fears that government will also backtrack on notifying labor courts, and also there could be some shying away from privatizing banks. Do you think that the government should now give a firm statement in the budget, or that reform process will continue?
Yeah, I mean, I would like to see more than a firm statement, I think, has been given. I'd like to see the actual implementation plans showing up. That's what will give a great deal more confidence now that all of this is back on track and on schedule to happen. The labor reforms that were passed in June and September 2020 were really very encouraging, good reforms. They were a reflection of a lot of work that was done between government, industry, and labor. and labor unions over many years. And there was a lot of discussion to really see how one could get the balance right between flexibility and protection. Bringing people who are unprotected, all the informal labor, into some degree of providing some degree of protection there, and providing more flexibility for formal labor, where earlier there's lots of protection but no flexibility. So it was trying to get the balance right. Those rules they're not the end game. We still have more labor reform to do, but it's a big step forward if they get implemented. It's too bad that more than a year has passed since those laws were passed, and they're still not implemented. And not only are they not implemented, my understanding is the rules have not yet come out either from the union government and also not from any of the state governments. So what I'm hearing is that this will only happen after the assembly elections. Whatever. I mean, I'm disappointed by that. I think it should happen faster. But if it's going to happen it's going to happen in March instead of happening now, let it happen in March. But I hope it happens in March. It would be, these are important reforms for us as a country, and it would be good to see progress on the whole labor reform area. The farm laws is a different matter. I mean, they've already been repealed. I mean, I think it's unfortunate. I think they were a good idea. It was a move in the right direction, a reform in the right direction. It's too bad that they've been repealed, but now it's done.
And privatization of banks.
Oh, privatization of banks. This has been, first of all, it was very welcome that the word privatization was used in the last budget for the first time. Yeah. I think it's again only a matter of time. I think the time has to be sooner rather than later. I think there is a concern that, in the run up to assembly elections, you don't want bank unions going on strike and, diverting attention away and so on. I don't know. I mean, I wish our reform program was not held hostage to the election schedule. I wish it would move faster. It's the right thing for us as a country. If we privatize these banks, and it needs to be real privatization, meaning selling the banks to the private sector, not selling public sector banks from one, you sell one public sector bank to another public sector bank. That's not privatization. That's simply, moving something from one pocket around your head to the same pocket. So,
yeah. Thanks a lot, Mr. Naushad, for talking to us. Thanks a lot.
Thank you. Thank you very much. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.